So we will now proceed with our panel discussion, which will focus on shipping finance and the types of capital available in Asia today. Moderating the discussion is Mr. Elton Chan, who's a partner at Stephenson Harwood in the Hong Kong office. And joining him on the panel is Erik Stromso, managing partner at Pareto Securities Asia, Mr. Gwenaël Delattre, director of shipping finance and offshore finance at Societe Generale, Mr. James Tong, head of global shipping and logistics of Asia Pacific and Japan, and head of diversified industrials in China at Citi Bank, and Mr. Jonathan Silver, partner at Maples Group. Before handing the microphone to Elton, a couple of ground rules. The audience will be on mute during this webinar to ensure quality control. You should have a control panel which pops up on your screen, on the right of your screen. There are two actions you can take today. First is to ask a question. To do this, you simply need to enter your question in the box at the bottom of the control panel where it says questions. I will receive them, and at the end of the webinar, I will ask the questions on your behalf. The second major action is to collapse the menu by clicking on the little arrow on the top of the control panel. With that, I hand over the floor to Elton to kick off the discussion. Elton?
Thank you, Andrew. Indeed, thank you to Maureen Money for giving me the chance to moderate this very esteemed panel on a discussion of a topic which is, of course, very close to everyone's heart. And I suppose to kick things off, and as with all things in 2020, we cannot simply begin any conversation without mentioning COVID. So the first question, and I will put to Jonathan, is would you just quickly let us know how has COVID affected your firm's operations in terms of just about everything, relationship management, marketing, obviously, because we can't see people, generation of work, structuring transactions, and then, of course, the documentation and then post-closing monitoring. Thank you, Jonathan.
Okay, thanks, Elton. Hello, my name is Jonathan Silver. I run the Asia shipping and ship finance team at Maples Group. Good afternoon to everyone, and thank you to Andrew and Maureen Money for the invitation to join this discussion. Just a very quick word on the Maples Group before I begin. The Maples Group is a global service provider offering legal services through international law firm, Maples and Calder, on the laws of the British Virgin Islands, the Cayman Islands, Ireland, Jersey, Luxembourg, and the Marshall Islands, where I'm qualified. The group is also an independent provider of fiduciary, fund services, regulatory and compliance, and entity formation and management services. Currently, we have over 2,000 lawyers and professionals based in 18 offices located in the Americas, Asia, Europe, and the Middle East. With that intro out of the way, I'll answer your question, Elton. I think the hardest part of the COVID situation, from my perspective, is the lack of face-to-face meetings. From my own experience, I think shipping is a very personal business with strong working relationships built up over time. And indeed, I count many of my clients as personal friends. Zoom meetings and telephone calls are great for catch-ups, but I found it very difficult to actually do business, to discuss business that way. Nothing really compares to a good business meeting followed by a lunch or a dinner and perhaps a glass of wine or two. I think it's the personal interaction is what I miss the most. From a technical perspective, as you know, Elton, Chinese banks and lessors often like to have original documentation on the day of closing, and that's sometimes been extremely hard to arrange. Printers at home not working, for example, so that a legal opinion that we were going to give can only be issued with an electronic signature, for example. And that's been actually rejected on more than one deal recently. As a Notary Public, I found it quite difficult to physically notarially attest documents. That's where an individual signer has to be in the same room as me physically. We've made it work. I've had to lay out documents in a discreet corner of a coffee shop and have the signer sign them in front of me, buying coffee so we didn't get thrown out. it's that sort of thing. Just to explain, I should explain really, because of the COVID situation, Maples has taken a very rigorous view, a very rigorous response to COVID, and in order not to spread the disease or endanger our clients, you know, our meeting rooms have been closed. That's really, you know, that's it from me, Elton.
Yeah, thank you, Jonathan. Indeed, we're all coming to grips with the new normal, the new normal, if we could call it that, of the COVID, and the fact that we have spikes, which of course appear out of anyone's control, is not helpful. Case in point is we may go back to some kind of normalcy here in Hong Kong, but there are still pockets of issues with, for example, our Paris office and of course our London office as well. And it is difficult. And you mentioned, of course, Chinese clients as well. And it is the same with most clients, which is, and I do agree with you, ship finance and shipping itself is a very personal business. And it's always better to see someone face to face and have that connection, even though we could effectively do things online by virtual signing and what have you. So with that in mind, you also touched upon the structuring, and so without this face-to-face meeting, and I will also invite Erik to chime into this next question, which is without the ability to see people and to explain or point to charts. So how have you find a way to get around it in terms of putting deals together before we move on to the papering, for example? So what kind of structure do you think have gained popularity because of COVID, or rather, what kind of structures do you see is maybe slightly getting out of favor?
Is that for Erik or me, Elton?
How about you first, Jonathan?
Well, for the finance structures, obviously, I'm only looking at it from a BVI, Cayman, and Marshall Islands perspective, so I can really only speak as corresponding counsel. But from recently, I mean, we've started seeing a significant number of Marshall Islands SPV borrowers in the structures, often flying Marshall Islands flag for reasons of economic substance. I'm more than happy to talk about ESR or economic substance regulations later, if that would be of interest, or indeed answer any questions that the audience might have. In many of the debt financings, and indeed sale and leaseback lease financings that I'm seeing recently, we've begun to see a resurgence of corporate support in the forms of guarantees and what have you, being given by Cayman and or British Virgin Islands holdcos and topcos. And very often in these structures, we're seeing an intermediate holdco within the ship owners group structure, and that holdco, which will be British Virgin Islands more often than not, in my experience, will give share security over the SPV ship owners. In terms of where we have a role as foreign counsel, we're seeing a lot of still seeing a lot of PLC bank debt financing of existing lease structures. I think I'm working with you on a few. Some takeovers, sale and leaseback lease finance, although a tiny bit less than there was last year. Some shipping bonds, and quite a lot of interest from private equity and alternative finance, and to extent some restructuring, although not as much as I would have thought given the COVID situation. I don't know if that'll change.
Thanks, Jonathan. And Erik, would you please let us know your thoughts on this one? About what kind of structures do you see coming up, and what kind of structures may be going out? Yeah.
Yeah, I'm not sure if we're seeing that many new structures necessarily, but I mean, you are definitely seeing, of course, an impact on sentiment from the COVID crisis. And you know, if you look at the start of the year, obviously, you know, most shipping segments were actually doing quite well. Earnings were up, and share prices were up. If you look at it now, you know, share prices for most sectors are down, you know, 30 to 50%. With other shares, you know, the S&P is up, as we all know, and kind of wonder about every day, but shipping is still down. So in general, there's been a move away from cyclical industries where shipping definitely stands out. And you know, a lot of equity transactions that were planned but not gone ahead. The bond markets have also struggled a bit. At the same time, if you just look at the Nordic market where we've been quite active, you know, you have year to date about 1.9 billion US that's been issued, and actually, you know, you had sort of a stop in February when the COVID crisis kicked in, and for about 2 months there wasn't much happening. But after that, more than half of the volume, over $1 billion, has been raised in that market. You know, certainly for selected issuers, but still the market has been open. And if you look away from kind of cyclical industries, the bond market has actually been quite strong. So I'd say, you know, there hasn't been that many changes, but certainly some, you know, challenges in terms of how do you do the deals, which sentiment is there. You know, we were working on some sale leaseback financing of a few VLCCs during the kind of absolute climax of the crisis, and you know, you have share prices dropping 10-15% in one day, and you're trying to negotiate a deal, and obviously you need to make changes, and usually it's good to be able to meet, and we couldn't do that. But at the end of the day, things closed, and you know, I think the appetite is still there, but as always with shipping, we just need to see you know, some earnings and stability come back, so that the people can feel a little bit more comfortable about the industry, given that's what they're after these days.
Thanks, Erik. That's very interesting. Indeed, together together with COVID, obviously threw a spanner in a lot of people's plans, and I guess in talking about the theme of change, and of course COVID enforced a lot of these changes upon us. Previously, we might have been thinking about slowly, gradually getting into grips with, for example, new technology, whereas because of COVID, we were forced to do certain things a certain way. I think Jonathan mentioned at the beginning about electronic signatures, which is something that we as lawyers have to come to grips as well and try to explain the risks to clients. So with that in mind, and if I may continue with you, Erik, it's what kind of changing do you think that any other agents of change affecting shipping in terms of technology? Do you think, for example, things like, there are always zing words being thrown around like blockchain, smart contracts, digitization, and with that, against that backdrop, and I think it's fair to say that shipping and ship finance in general has a very long history. We like doing things a certain way because we know it works. We tried it many times. But against this tide of new technology, do you see any sort of rather impact or some major changes being brought about in the way we do ship finance because of technology?
Well, I certainly hope and think that we will see a continued, you know, digitalization of the you know, documentation and closing of ship financing transactions. It's always seemed strange to me, all these physical meetings that one requires to have, and these days I know that a lot of the legal firms have been working, you know, around the clock to find ways of digitizing that, and I think that will just continue. And as with many other sectors, you know, COVID is just a catalyst to get us started. I'm not sure it's going to impact the financing, you know, itself that much, the actual content and nature of it. But you know, I would say what we have found, we're concerned with, you know, the inability to go on roadshows, for instance, and meet investors when we're out marketing capital markets transactions. And so, you know, it was with some nervousness that we started some of the first deals that we did during, you know, in the middle of the various lockdowns around the world. But we started out having some all virtual roadshows, and you know, they were a great success. And we just recently, you know, closed 2 bonds, one for Klaveness combination carriers and one for Navigator, listed in New York, and these are all virtual roadshows. Obviously, there are certain meetings where you would have liked to have that face-to-face and that handshake, but at the same time, you can reach out to so many more people. You can have more meetings in a day. If there's 3 clients in one city, you can actually meet those three clients. It's not worth a trip, but it's certainly worth a Zoom session. So that's actually been great, and it's allowed us to increase the investor base and brought our clients to a much broader investor base.
Thank you, Erik. So turning back to one category of financiers that we already mentioned, of course, the Chinese leasing companies, which is something that is quite personally close to me because a lot of what I do will involve Chinese leasing companies, whether it's acting for them as lessor counsel or acting for them as borrower counsel when the senior debt comes in. And with the mention of senior debt, I would turn to Gwenaël and James now as the 2 traditional, so to speak, ship finance bankers we have on the panel. And I guess the question first is for, maybe I'll turn to Gwenaël first, is that, and James, please, afterwards, I'll ask your view as well, is with the traditional, well, the more recent trend has been, we have been seeing for Chinese lessors, they would do their sale and lease back or operating lease or JOCO. And then they would turn to, for example, Societe and Citi and a group of syndicate banks for the refinancing at the senior level. Do you think, or have you seen them moving away from that into other sources of financing or refinancing in that case? So for example, capital markets, have you seen it happening? Because obviously there was a high profile one a couple of years ago was for the CDB leasing IPO, but some would argue that is more like a one-off strategic development for that institution rather than something that would do it routinely. So with that in mind, Gwenaël, please.
Yeah, thanks, Elton. I think the two types of financings actually will continue to coexist. I mean, especially for the large leasing houses in China, and we already see them very active in the offshore bond market. But I don't think that they will completely get rid of traditional ship financing. On the contrary, I think it offers some flexibility and level of expertise that they find generally useful. They continue to be quite well banked and will continue, in my mind, to be quite sought after by the traditional ship financiers. I mean, they've demonstrated their resilience in the current COVID-19 environment, where they've been able to continue their operations as planned, even though some of the lessees on some of their portfolios were having more difficulties. So I think the fact that they will continue to be well sought after by ship financiers will still make traditional ship lending attractive to them. That being said, what we do see is that, yes, they tend to benchmark more and more the two types of financings together. And when one is more expensive than the other, yes, they will generally tend to turn to the other in these kind of circumstances. But I don't think that they will move away completely from traditional shipping lending and into capital markets. I mean, they're looking for diversification, and diversification has played quite well actually for them as well in the current environment.
Thanks, Gwenaël. And James, sorry to keep you waiting. Can we have your thoughts, please, then, on the interaction between traditional ship finance banks and the PRC leasing companies?
Sure. I think no one would deny any form of financing, particularly after the financial crisis. The market has already shrunk quite a bit when it comes to capitals. I think that really, in fact, helped the current situation of COVID-19 much better. Amongst the COVID-19, in fact, shipping is one of the booming industry comparing to the others, although there might be fallen in terms of the consumer interest, but then during the lockdown time, shipping has been continued to ensure the flow of goods. So in that case, I believe that a discipline of the ship owners and also investors over the last 10 years or so have actually created opportunities for them to get a better financing, and those weakest links have already left the market. I think it's a good sign. But then when it comes to a leasing company like this, I believe that they have been using that already from the source of funding. Like they might have IPO, you mentioned about CDB, but then on and on, they also have they use the money market, they use their short-term deposit market in China. They do raise a bond, but at a corporate level rather than at a project level. So even though at a project level, like if you're looking at asset financing, sure, I mean, I think traditional bank financing will continue to be there, but not necessarily the same terms. We see that there will be a shorter tenor, low LTV, but then I think not every transaction could be put in the capital markets. So likely in the market, or comparing to 20 years ago, you know, it's considered junk, right? No one actually know how to rate the shipping industry at all, so no one would actually go and that junk. And then after a while, I think rating agency get to understand the industry so much better than before, and we see that, as Erik mentioned, the capital market actually is quite hot too for those projects because they're looking for like infrastructure, like a utility that they would pay fixed coupon for 10, 20 years. That means it has to go back to the basic of shipping finance, long-term contract. That's how shipping finance came in the first place, not because of the asset. I think if we continue to concentrate on financing an asset, I think that would get us back to where we were before in the cycle. I believe that lots of banks are not looking at that at all, either left the market or they completely changed the way. It has to look at that in the totality. Why I mentioned that, it all links to the whole supply chain, because that's also related to all the regulations we were talking about, Poseidon principle. This is a shipping company. We should not just looking at shipping companies, but whole supply chain. So in that case, I think for those companies who can get various sources of financing, that including export credit agencies, relationship bank financing, bond market, I think that was someone that as a leaders, they will be able to continue to stay at the lead of those table. Otherwise, the smaller owners will be getting more challenging because of all this regulation coming out that we are still waiting to see. So this is my opinion.
Yeah, thank you, James. And I suppose for my own, for what it's worth, my own 20 cents on it is for a few years back, I remember reading reports and also getting queries from clients about potentially taking the aircraft finance, some of the aircraft finance tools, and applying to shipping. Because ultimately, as James mentioned, you can look at it as if some analysts rather who doesn't have a ship finance background or shipping background, they would look at it as an asset, look at the cash flow, the key contract, and say, right, this is say a portfolio of 20 ships. They would almost do an analysis almost as if they were real estate mortgage, in that, okay, there's income, there's asset value. So how could they, for example, securitize it and then put it into the money market? Now, yes. Personally, I haven't seen as big an uptake in that compared to the aviation market, because the EETC in the US market has been going on for many years, but not, at least again, just my own experience, not so much in the ship finance market, especially in this part of the world, in Greater China and in Asia. It could be because of the high setup costs, obviously with the, and I see James his head, sorry.
It's doable. In theory, it's doable. It's just because in Asia, banks have liquidity. So they have been financing it at a submarket, very competitive amount. Doesn't mean that they meet the return. In fact, if you look at container, I'm not talking about container ships, container, you can securitize a portfolio of containers, right? So in other words, if you're comparing airline, the most close example would be container shipping, containerized shipping. They would only have booking slot. In fact, they're parallel, they're very similar, but one is moving people, one is moving goods. So in theory, it could work. It's just whether it's economic. Comparing to bank financing, most of the owners or finance team of those companies are more comfortable because it's more certainty. Because it's not just only whether the product is available to market, it's whether what would the incentive for them to do so too. I think this is something that if there is a low-hanging fruit, easy financing, most people might not think tomorrow the tap will turn off. right? So that would really take those forward-looking and also really knowing cycles. Those companies will go into how they diversify their source of funding, right? In financial crisis time, 10 years ago, even the top public sector with a AA rated, they would not be able to get financing. Yeah, sure, you pay 400 bips, 500 bips for AA company. So everything comes with the price.
Yeah, thanks, James. And I suppose I can clarify, when I say a high set of costs, I was referring to the legal fees, a high set of costs. That's why, you know, clients walk away. And James, if I may continue the next question with you, seeing that you on a panel, you from the U.S. institution, and another inevitable topic these days, of course, is the uncertainties brought about by the continuous U.S.-China political situation. And obviously it would affect everyone because of competition with the two superpowers on the planet. And so, James, from your side, and of course to the extent that is relevant, how has it affected your firms or your team's thinking in terms of getting new work and positioning yourself in the market, talking to clients? What can you say? What can't you say? Just very broadly, of course. So please.
Sure. I think it's very normal for people to come to ask us because we're an American bank. So that's the reason that we continue to be in 160 countries. And we actually, in fact, spend a lot of money on compliance, on our network. And we are probably one of the last global banks that have got so much coverage, which is important for Citi. And it's because of those experience that we have. It's all about the relationship with those government, understanding them, and also being political neutral. I think this is something that we facilitate the flow of money, and then we need to respect the local regulations like that. So when it comes to sanction, I think we also need to look at, when it comes to sanction like this, for example, you have to look at the fine print, what sort of sanction we're talking about here, right? I think ultimately, this is something, the experience that we have, we provide very clear transparency. We will continue to invest in our network. And for that case, because it's in our DNA, we cover 160 countries, 100 countries are direct subsidiaries like that. So we manage this all the time. And that's why in our target market selective criteria itself to also shape us what sort of client that we deal with in the first place is to protect us from that difficulties. And most of those clients that we choose as are relatively more international, more global. And I think that also help us to navigate this sensitive matter. But having said that, we do have Citibank China, like where I was in Shanghai before, looking after 7 industry. And obviously some of the names might be sensitive in that sense, but it's just BAU for us to deal with those situations anyway. So I think for sure that we will be even more diligent. It takes a little bit more work for us to do all these kind of transactions, and also how to be transparent and continue to provide information to both sides. I think this is what we play a very important role in that sense. So I don't really see that really affecting us a lot in that sense, because China is also one of our focus countries too.
Thank you, James. And Jonathan, turning back to you, at the beginning, when you introduced Maples Group, you mentioned that you also have operations in Americas. And so do you have, what's your take on this ongoing situation between China and US, and the fact that, you know, we are, well, myself and yourself are located in Hong Kong doing business involving a lot of Chinese clients who may or may not have US. Yeah.
Thanks, Elton. Well, I think at the Maples Group, with our global footprint and significant business activities across the US and in Asia, we aim to be as supportive of our clients as possible. So we try to provide workable solutions where there are uncertainties. We've recently worked on several redomiciles across several jurisdictions and a number of reflaggings. I think it's a fairly fluid situation at the moment, so I think we're far from seeing a final outcome. I mean, one of the things that we are starting to see, there's shipping finance deal flow into Ireland now. As you know, perhaps traditionally more an aircraft finance jurisdiction. And I think we'll begin to see a lot more shipping using the Republic of Ireland as a go-to jurisdiction in the future, particularly on deals with a US flavour. I suppose a little plug. Bear in mind, BVI, Cayman, and Marshall Islands, they're all stable and neutral offshore jurisdictions. They lend themselves to deals that have a US Asia flavour because, as I say, they're neutral. And so I've seen quite a few Chinese entities, lessors start to use those jurisdictions more and more. Indeed, Maple's fiduciary, which is our fiduciary services arm, can and does provide directorships and other corporate services to the Chinese entities where that's required.
Yeah, thank you, Jonathan. I'm cautious of time, and indeed, time flies when you're having fun. So to bring this conversation to, I suppose my final question would be for Gwenaël and Erik, and which is, I'll make it as open-ended as I can, which is, how do you see the shape of ship finance changing, if at all, in, say, the next 3 years? So a bit of crystal ball gazing here, and would perhaps, Gwenaël, you would start first, please?
Yeah, okay, yeah. Yeah, you're right. It's a bit of a crystal ball exercise. And what I can say is that the shipping industry itself is in a phase of transition, on many aspects. Whether it's from an environmental perspective, but also economic perspective, the business models are evolving a little bit. And the shipping finance industry is also evolving as a result of that. Some of the trends that we've seen for the past few years will continue over the next 3 years, and I'm thinking about regulation. So both in the shipping industry, of course, but also in the ship financing industry. And I would say all the more so as COVID-19 is really testing capital requirements for some banks, and we expect the regulators to put even more emphasis on that. And of course, that will have an impact on how banks approach ship finance. As I'm sure you're aware, Basel IV is coming, this period, maybe the 3 to 5 year periods that we were mentioning about. So this is here to stay and probably to be actually reinforced. I think another trend which will be an even more intense point of scrutiny for banks relates to sustainability and all the ESG factors, generally speaking. I think that we are starting to see the industry doing efforts in order to meet decarbonization targets set by the IMO and the various governments worldwide. I think that banks, through various initiatives, including the President Principles, to which both Citi and SocGen are founding members, show that banks actually will place a lot of emphasis in due diligence on that. And all these aspects actually will also permeate to the way banks look at risks even. I think in the current period of uncertainty over the next 3 to 5 years, for instance, I think there will be a lot of due diligence on how to manage residual value risk on existing ships, but also when you finance at new ships. Is it, for instance, a ship that will be able to go through the next decades in terms of operations and environmental expectations. So I think the key word for the next 3 to 5 years, both for the shipping industry and the ship financing industries, are those of transitions. And I think that it is already starting to test us and test our abilities and capabilities. We see some banks refocusing on some other segments and leaving shipping. I think at the same time, for banks which are committed to the industry, like SocGen, it will create a lot of opportunities, and we're really looking forward to seizing them.
Yeah. Thank you, Gwenaël. And Erik, would you please share your thoughts, please?
Yeah, no, I think Gwenaël touches on a lot of the points that I agree are going to characterize the next few years. When it comes to sustainability, technology, and how that will come to impact financing. And Obviously, the banks are focused on this for various reasons, partly out of the kindness of their own hearts, but also, because they're thinking of, residual value risk. And that's also something that we're seeing, more and more investors focus on as well. Obviously, they they have the same types of agendas as the banks in that regard. And, you're going to see more of that. And right now, there's a lot of uncertainty on, what type of technology is a technology for the next 20, 30 years. And that is limiting the appetite, not just from banks, but also from shipping companies themselves, which, hopefully should curb some of the new building orders and maybe be a positive. But I think what this all kind of boils down to, whether it's, the regulatory side, for the banks and how that impacts their willingness to fund smaller players, whether it's these technological ESG challenges, etc., and also new types of compliance and regulatory requirements that are popping up for shipping owners, is it all kind of points to the same thing, which is that you're going to continue to have this differentiation between larger players and smaller players. I don't think it's going to get any easier to be a small shipping company over the next few years. And a lot of the time, the discussion is sort of, how long is it going to last? How long are these big guys going to have an advantage? And I think it's going to, I think it's going to last for the foreseeable future. It's going to be difficult to have a small fleet because there's just too much that you need to comply with. There's too many challenges that are difficult on fuel and technology, and there's too little appetite from the financing, which is such an important part of ship finance. So maybe that will also lead to some consolidation. So if you have that, a little bit of reduced appetite on new build orders, a little bit more consolidation, could bode well for the markets.
Thank you, Erik. And I'm conscious of time. So, Andrew, I believe there may be time for questions from the floor, or the floor, proverbial floor, rather.
Yes, thanks, Elton, and thanks to the panel. We have a number of varying questions. I don't want to spend too much time on each question. I'm just going to go through some of them. A lot was said about kind of Western banks and Chinese leasing companies. One of the questions that has come in says some Taiwanese banks and other regional Asian banks are now looking at shipping. Do they have a serious appetite, and what kind of deals are they looking for? Erik, perhaps, have you been in touch with Taiwanese banks or kind of other Asian banks?
Yeah, I think in general, when we've been structuring leasing transactions with the banks out there in Asia, you notice that they tend to have more of an appetite and a willingness to lend at more attractive terms than what we see in the West, and recently we've also seen more interest coming out of Taiwanese markets or Taiwanese leasing providers and private equity funding out of Korea. So there's still a lot of new types of tools, but they do tend to favor the more stable types of transactions if you can structure them.
Thanks. A question for Gwenaël, perhaps. Earlier today in a previous session, Hong Kong ship owner mentioned that there is already plenty of finance in the market, perhaps too much, and that some European banks pulling out of Asia or cooling off will not have an effect. Do you agree with this statement?
Yeah, I remember it was Matt's making that comment from backbasing, if I'm correct. I think one of the earlier comments, which I think was made by Erik, was very much true and also applies to what Matt said. I think the very large corporates, the very well-established names, will find that there is no shortage of liquidity for them, and I think that's probably where Matt was coming from. But on the other hand, I think the smaller outfits will find it more difficult to find liquidity. And I think it also ties back to the fact that there's been for quite a few years already a flight to quality, a flight to size as well. But I think that COVID-19 is going to reinforce that. I think this is really, a sort of black swan event that banks will want to avoid going forward. And of course, going to the large corporates will be something that will provide comfort to them. So I think we have to dissociate these trends depending on the size and the quality of the owners.
Mm-hmm. Thanks. A question for James. Looking at Amber's presentation before this panel, asset values in shipping are always volatile. But if, for example, you look at the cruise ship example that Amber gave earlier, they can be extreme. Will some banks be badly hit, and how do you think will it affect their shipping outlook? James?
I think yeah, sure. You hear me? Yep. As I always mention, if you look at the asset value as the first way out, then your risk manager will probably want to enforce it immediately and cut the loss. But if you look at that as a shipping company itself, as its health, it whether makes sense for them to ride through this cycle. I think this is really important to look at that. Why I emphasize it's important to not just look at an asset base. You have to look at the balance sheet of the company, whether they have got various sources of financing, liquidity. Liquidity is always key, very important for any company. And for a cruise industry, the barrier of entry is quite high. So do you see to continue to support them? At the same time, I understand that for the cruise industry like that, export credit agency have been stepping up to really help the cruise industry to create certain kind of support. Of course, they can't save everyone, but then I can see that the importance of saving, there's some kind of saving mechanism in there. So to me, LTV is just only the first indication of the financing amount. So I think it's part of the equation when you structure a deal. And with a cruise ship like this, which is illiquid, and also most of them are not even a ship, it's a floating hotel. So you wanted to analyze it and not something just floating as a ship, then you will look at it very differently, because shipping is just a generic term. And each of the industry, each of the sector, each of the sizes have its supply and demand. There will always be banks, I call that before, a tourist bank. They come here and get burned and leave for a few years and come back again. And that's why ship owners need to have a very clear and diverse sources of financing, including relationship banks, export credit agency, if you could, although it takes a long time to crack, capital market, and liquidity. As simple as your own company trade finance would really help a shipping company stay afloat. So I think this is something very important. You cannot just only isolating that as a value. I hope that answers your question.
Mm-hmm. Thanks. And just one more question related to Citi. Citi announced on Wednesday that it has become the first U.S. bank to receive a domestic fund custody license from the China Securities Regulatory Commission. I mean, it might not directly relate to shipping, but you were based in Shanghai for some time before moving back to Hong Kong. How does Citibank view the Chinese market and in relation to shipping?
When it comes to domestic shipping, it's a very large size of business that we never really participate in any domestic shipping finance. And when it comes to international finance, obviously China is one of the top economies right now that involves a lot of global trade, import and export. So for that part, we have already engaged with those clients. I think we're just a icing on the cake that we have once again proven that our commitment to China, or actually to global trade, and I think it will benefit shipping company in certain way. but in the details, let's see how it goes.
Okay, thanks. So one final question for the lawyers on the panel. In regards to leasing operations, what effects, if any, does the risk of reclassification of the operation have on the decision-making process in terms of how to structure the deals or whether or not to seek such financing methods in the first place?
Jonathan?
Definitely for you, Elton, as onshore counsel.
Well, I suppose because we can't ask the question as a classic lawyer. I suppose first response is by reclassification. I'm assuming you're talking about the accounting treatment, finance lease first operating lease, and assuming I'm correct on that one. Speaking from personal experience, hasn't really made that huge of a difference. Maybe because just my practice. Because when I speak, because a lot of what I do involve Chinese leasing companies, and we've already touched upon that. Obviously, they have a lot of liquidity, they have a lot of funding, they have always been aggressive, and we've seen in the past couple of years a lot of up-and-comers as well. So the established players, we all know who they are, but there are a lot of smaller players coming up. And when I receive a term sheet for quotation, for example, it is still pretty much the tried and trusted sale and leaseback model, whereby it's a finance lease, and then you have your upfront payment, which is similar to a loan principal, and then it amortizes over the life of the lease, and then plus a bit of margin at the top. But of course, we don't call it margin; it's inbuilt into the rental payments, whether it's fixed hire or more often than not, we see a floating hire, so led to a benchmark, which is LIBOR. Now, but of course, LIBOR itself will be phased out by 2021, which opens a whole Pandora's box, and I don't think that we have time for it today. But I guess again, to stop myself from being long-winded, the short answer to that question is the structures that in the advertising structure we see since IFRS, I think 2019 came about, at least from the PRC lessor's point of view, is more or less the same, the structure-wise.
Thanks. So, gentlemen, that's all we will have time for today. Thank you again to Amber and also Elton, Erik, Gwenaël, James, and Jonathan for your contributions today. For members of the audience who have been listening in, this webinar is being recorded and will be posted on our website later today or tomorrow. We will also send a follow-up email tomorrow with some contact details. So if your question wasn't answered today, you can follow up with our speakers tomorrow. This is the last session and concludes our virtual Marine Money Hong Kong Ship Finance Forum for 2020. We would like to thank our sponsors once again for their long-standing support, especially during these pressing times. Without their support, we would not be able to produce this high-quality, global, interactive networking and intelligence sharing experience, and we hope that you've enjoyed it. We certainly have. Thank you all again for tuning in. This is your host, Andrew Oates from Marine Money, signing out.
Thank you.
Thank you.
Stay safe.